Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, May the 16th. The year's 2021. Let's talk trading. It's time for the weekly open and gap. Just a quick reminder, these videos are for educational purposes only. Your results may differ from mine. So last week, for some strange reason, I forgot to put out a Sunday video, so try not to make that mistake twice in a row. As you can see, we have some gaps that have filled, but we still have a few that have not. So for hopefully some of you weekly open gap traders have already pocketed your pips. And for those who haven't jumped on yet, there's still opportunities. We are putting in the opening range for the week. You can see we're above the opening range for the month and the opening range for the year. In fact, we're 445 pips above the weekly open, 276 above the monthly, and right now, daily, weekly, we're just down 8 pips below the open. And we've been trading her in the trading day for just about 6 hours. Inside bar traders, there's opportunities on other pairs. Right now, the pound is not presenting one. For the range, the pound New Zealand's already up to 106 pips. Not sure what's going on with that. Look at a couple of the other New Zealand pairs here and here. We don't have that big of movement. Well, we do have 70 on the euro. So something between euro, the European Union versus New Zealand. Like cause some price movement. Buy zone pivot outside of the buy zone. So there was a short bias, as you can see here. And pivot's been taken out. But the pound had actually gapped down. So there was a bias to the north side, and it's already filled that gap too. So either way you trade it, you were rewarded if your timing was right. Not enough range for the rat zone at this point in time. Weekly pivot 1.4084. That's already been taken out. We've already taken out the monthly pivot this month. And once again, we took out the daily, we've taken out the weekly, and we've taken out the monthly. One thing I've been doing and noticing is the H4 pivot. As you can see here, we had a missed pivot back on, let's see, where was that? On the 12th, but you can see price came back up and took that one out. So I've been playing intraday, kind of using it as a bias, especially when trading the wall malls zones, or wall mall lines, I should say. And I'm looking to see maybe get a bias and catch some of that H4 range. Wick zones in and out. Simple wick zone trade. Ranges. I had a trader ask me about if I had any range indicators. There's TRO range. There's TRO range gauge. There's TRO ranges. There's a bunch, but I think the smart range indicator, even though it is a 2020 donational, because what it does is it tells you what percentile the current range is and the previous ranges, however many you want to display, where it falls. So if you're looking at 100 bars, kind of average range of 46. But average doesn't necessarily really help you. You really need to know the frequency distribution, and that's where the percentiles come in handy. So for example, here you got an average range of 100. But if you look here over the last 100 bars, I'm sorry, you have an average range of 46 here on the daily. So right here, we're at 18 or 27 percentile. So 33 put us at the 48. So I'm not sure where 46 would put us, but it would probably over 50. So that, because we've had some big ranges, and that's going to skew the average. That's why it's better to use frequency distributions and percentiles, in my opinion. And let's see if we, let's change this to the weekly. You can see here, we've got a ways to go. We're still at the 0 percentile. We haven't broken out of the high or low, but off the top, high minus close 18 pips, that's 14 percentile. And close minus low 9, that's only 3 percentile. Once again, we know the range is going to expand. So depending if you're a reversal trader or breakout trader, that'll help you. And also looking at the monthly, same thing. You can see here, high minus low, only 21 percentile. So there's still some room for price to either go up more or maybe make a new low for the month. Let's see, we're in what, the third trading week of the month, I do believe. So a lot can happen in a day, in a week, or especially in 2 weeks. And just looking at the wall mall lines here. You can see we've got the H1 break right here, previous H1 taking it to the north. And for those of you who are probably wondering, what are these little arrows doing? That's the TROPA high-low, which I'll be releasing probably sometime this week when I send out the latest batch of donationals in the TRO build 1300 file. So the donators will get this indicator first, along with the updated HL5. And I made a little modification in Sweet Spots Gold. And I'm trying to think. No, I think I made a modification at 3-level ZZ. And there's probably a couple others I made some mods to. But these little dots basically are saying which way price is biased towards. I hate to use the word trend, but I can use these dots to stay in a trade or to exit a trade. Tell me when to say, should I stay in that trade or should I get out? And it's dynamic. So this can go from blue to red or from red to blue within this hour. But right now it's saying stay in. And so we can watch and see what happens. So it already broke the high here, previous H1 high by 1 pip. And I think I might have shown you one thing in the HL5, the latest version, my display decimal. So some of you, if you like that extra, like to see it at the points, you can see here, we've got it in points. I didn't put that in the TRO HL, maybe I should. And once again, I mentioned in the HL5, I put in the highest low and lowest high. Somebody was asking if I was going to put order blocks into the dashboard, and the answer is probably not, simply because there's just no consensus on what an order block is. So I would rather put in the lowest high and highest low, and you can determine if you want to use that as an order block or not. And this feature is now in HL5, but I also have a regular TRO, I think it's 2021 HLLH, and the difference is this one uses bars. The other one, you could say go back to the beginning of the day, week, month, go back to 2 months ago. So you can set those parameters and put up multiple. Because for some people, they might want to know, well, what's the lowest for the week? And as you can see, this just changed because 34 bars ago happened right here. So the M1 lowest high was 34 bars ago. And so as time moves on, once again, it's dynamic. this will probably come into here. It's like about there at the end of this minute. Other indicators, the multimeters just tell me, alert me to situation. So close minus the highest low. You can see here on M5, it's 1 pip above. So if I switch over to M5, I can see I got a 2-ball looking for a short if I want to take that trade or not. So that's how I use that. And just for those of you wondering, these are the indicators. And there's the 2021 high, low, low, high, or highest, low, lowest, high. So if we switch this back over to M1, you can see we put in a 3-ball. But do you want to go against the H1 candle color? We go back. We don't want to trade against the bias indicator. Even though this time of day it's really hard. So I usually don't trade at this time of day because we're in the Asian session right now. But you can see we just had a little movement to the top there. So if you were taking that trade, you'd be about 3 pips to the good, which you could take your money off the table, or since it's hitting the Walmart line, you could stay in, maybe move your break even up to or move your stop loss up to break even +1. So it basically would either scratch the trade but protect you from any downside. In fact, that's something we'll probably be talking about this week, is more about protecting the downside and thinking about trading a little bit different than what I call the traditional training, how most traders get trained by the other people out there, posting videos and writing books and doing seminars. They pretty much do it the same way, and that's one of the reasons why there's so many losing traders out there. When they all say it's like 90-95% of traders are gone within 3 to 5 months, or they very rarely last a year. And it's kind of funny. What was it, last week? Somebody was asking if I had a My FX book and how do people know. I go, well, I've been in this game since 1977. I started online trading, I think, around 2001, if I remember correctly, and I'm still in the game. So I think that says it all. You can see some of my beginning work over at stockfetcher.com. It's still, standing the test of time. You can, TradeStation basically erased. They canceled me. That's the word that everybody's used. They canceled me. I don't think you can find anything unless you find an old TradeStation cache, and a few people saved it, uploaded it to Crestlick. And Baby Pips did the same thing, and I think ditto for FOREX Factory. They canceled me. But, I don't care. So, as you can see, that trade could have paid off 4 or 5 pips. You could take your money off the table and be done for the day. Or you could stay in and see how much more, considering it's only at the 6th percentile. But at this time of day, I have no clue, because I'm not looking at that chart to let me know how often maybe this is 13 or more pips, like what Walmart and I do. So anyway, that's the Sunday video. So I hope you learned something. And just remember, when you're sitting down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.